What's going on, guys? My name is Matt. This is Run Up the Score, and today we're going to be adding the first company to our Coffee Can portfolio. If you guys don't know what that is, there's a video where I explain it, but just briefly, it is a portfolio where you buy, you never sell. That's the major rule, is you just are not allowed to sell. Makes you look long-term, makes you look at businesses that are going to be around for a long time, and it just gets your mind to think long-term, whereas Wall Street, CNBC wants you thinking short-term. So even if you don't invest like this, I think thinking like this is still good to do. And I have two young sons, and this portfolio is going to be passed down to them. And I think it's a perfect way to invest if you're planning on passing this portfolio down when you die or when they're like 20, 30 years old, you know, something like that. So that's why we're constructing this. And today we're adding our first company. So we're looking for companies that fall into one of three categories: compounders, spawners, or I would just call them high moat businesses. So those are the three major categories. A lot of the times the companies that we pick are going to be intersecting multiple categories. This company doesn't, though. This company today is a pure spawner. And the way that I generally value companies, especially when I'm looking super long-term like this, approximately right versus precisely wrong. So the way that I value companies is approximately right. I want to be directionally right. And like you'll see a lot of people, they do like DCF, discounted cash flow models, and they give you like this precise, like this is the price that it should be, this is the price that it is, it's trading at a 40% discount. I don't find a lot of value in that. I would rather be approximately right. So like here's a wide range of outcomes that could be possible. 80% of those outcomes are really good and the stock price will go up a lot. 20%, maybe you lose a little bit. So just directionally, approximately right. So that's how I value the companies. And the grand unveiling, the first company going into the Coffee Can portfolio. This is important stuff. My kids are going to look at this portfolio one day and they're either going to be like, wow, dad was a dummy, or dad knew what he was doing. He set us up good. So the first company is, I guess it'll probably be in the title, so you might already know. Interactive Corp. IAC is the ticker symbol. And the best way to sort of get up to speed on them is I'm going to go through a little bit of their company history here. So IAC Corp has spawned many companies that you probably know. So what they do is they go through periods of time where they acquire a lot of businesses in similar business lines. They build, they grow, and then they spin off. So you can see late 90s, early 2000s was an acquisition time. And then in 2005 to 2010, they spun off 6 different companies. And that's sort of the way that you make your money with this company, is you're given the spin-off shares, and then those are yours to do what you want with. So really briefly, just to go through some of their big successes, the biggest success they've ever had was Match Group, which is currently around a $40 billion company. And you can see in 1995, they started with $250 million market cap, and they have since created 10 public companies with $100 billion worth of value. So just really incredible results. So some of their successful spinoffs has been Expedia. You know, that's a really, really big one. Match Group, probably their biggest and most successful one. Ticketmaster is a big one. HSN, LendingTree, TripAdvisor, I actually had higher hopes for. A lot of their companies, the spinoffs don't do well once they're spun off. Match Group being the big exception. The thing is, we're putting this in the Coffee Can portfolio, so we're not ever selling the spinoffs. And I think that's cool. It gives you a lot of like optionality, and like it's a definite thing that you're buying one company now, which is going to turn into multiple companies in the future. So I think that's a good foundational piece for the Coffee Can portfolio. So just recently, they've spun off Match Group and Vimeo. So they're now again in a little bit of like an acquisition phase, and they're building up some new big businesses. So they're totally out of the online dating space. So they had Tinder, they had Plenty of Fish, OkCupid, Match.com. That's all a part of Match Group. That's a common thing you'll see IAC do, is they will either buy or build very common businesses or similar businesses. So like Match Group, Tinder, Plenty of Fish, OkCupid. They're all very similar. Same thing with Expedia. So they bought Hotels.com, Expedia. There's a few other ones that also kind of went into Expedia. And you can see there's a lot of common threads between what they're doing. It's a lot of marketplace businesses. So Match.com, Match Group is a marketplace for dating. Ticketmaster is an online ticket marketplace. That's just like something that they've done in the past. They're really good at doing it, and I have confidence they'll be able to do it in the future. Now, the current state of the company, I think a lot of people would say, is maybe it's their weakest roster of businesses yet. The company is priced to reflect that, which I think is an opportunity. So I think betting on the management to continue doing what they've proven to do. These are world-class experts at this now. Like, all they do is build marketplaces successfully. So to think that they're going to fail with some of these, of course it could happen, but I think it's unlikely to happen. So currently what they own, and you can see here, they've been doing something new lately. So they've been doing a little bit of minority investments, which means they are not controlling shareholders. They don't control the company. They do contribute in ways. They help out the company in certain ways, but they're passive investors. So two recent ones, Turo, which is a peer-to-peer car rental service, and then MGM Resorts, which Las Vegas, and they're getting into online gambling. That's why IAC has taken a pretty big percentage ownership in MGM. And so far, so good with the minority investments. MGM has already doubled, and Turo, it's privately traded, so there's no quote on the price, but it's safe to say it's probably doubled since they invested in 2019. Their current roster of businesses, the major business lines that they're currently running, is Angi HomeAdvisor. So this is the big one. This is the one that seems like a lot of people are starting to question whether it's going to work. So Angie's List and HomeAdvisor.com and a few other smaller sites are kind of being merged and rebranded into a business called Angi, ANGI.com. And it's selling like home remodeling, handyman type work, and it's matching up handymen and service professionals with retail people that need those services. That's the big one. And then the other big one, I would say there's two primary businesses and then some smaller ones. But there's always a lot in the pipeline that might pop up and be a really big business. So you got a lot of potential with a lot of their other investments as well. The other big business line is not actually one that is on here yet so this is from June 2021. So the other big business is Dotdash Meredith. So Dotdash is one that they've bought and built, and Meredith is one that they just recently bought. So Meredith was a big print publisher, and also they have been getting more and more into digital, and IAC bought them for $2.7 billion, and they are going to be transitioning to like more premium print magazines and mostly digital. IAC is really good at the physical to digital conversion, and you can see just like some really amazing properties. So Dotdash came from About.com. If you maybe remember, probably like 10 years ago, About.com was big. They split About.com into 6 or 7 different businesses, like more segmented, as opposed to one big general information site. And they've had really good success with that. They own all of these now. This is part of Meredith too. So, just like some really big name brands. So a few of the biggest ones on here, All Recipes is big. Food and Wine is really big. Investopedia, Very Well is really big. The Spruce is really big. They're good at food, Simply Recipes, and Travel and Beauty is like their main business lines as far as Dotdash Meredith goes. It's primarily just an online publication that generates the most revenue. It's the number one revenue line item for IAC currently after the acquisition of Meredith. And then they also have Search. So it was a really good acquisition. It was Ask Jeeves originally, and it's a search engine. It doesn't get a lot of traffic, but they're really just monetizing it pretty well, and they've gotten their investment back easily and then some. And it's not something I see as like a really high growth avenue, but it's there. It makes them money. So Search makes them about $800 million per year. Angi is pushing $2 billion, about $1.6 billion, I think it was in 2021. And then Dotdash Meredith, they just acquired them in Q4, but it's going to be over $2 billion in revenue. They also have a bunch of things in this category, emerging and other, which the biggest one here is Care.com, which is a place where you can get matched. Again, it's a marketplace where people like me can find babysitters, tutors, house cleaners, and even elderly care they do. So it's a marketplace for that. Daily Beast is a big online publication. I think it's kind of decreased in value quite a bit lately. There's Blue Crew and Vivian. These are staffing marketplaces for a few different things. So Vivian is for healthcare professionals, and then Blue Crew is for more like industrial, would you call it, staffing? Yeah, just like hourly workers, warehouse workers, manufacturing, retail, hospitality. And they talked about those in the recent shareholder letter. These are two businesses that they see a lot of promise in. And then you have Mosaic Group, which I've looked into this one. This one doesn't seem super promising. It has like a bunch of smallish apps. I don't know. It does probably like, I haven't looked, but maybe 10 to $20 million in revenue. Not much. That's not really a growth driver at all, I would say. And then I actually don't know what Nuco is. What is Nuco? Nuco is a platform for exceptional entrepreneurs to build businesses. Haven't heard much about that one yet. And then another thing to know is they have a bunch, probably like dozens of businesses that they're starting up inside of IAC that don't even make it to their website. So like there's a lot of potential in there that's probably doing like, a few $100,000, a few $1 million in revenue that just isn't big enough to really be on the website or listed as a line item at IAC. There's some potential in just the unknown that they're building within IAC. So that's the current state of the company. That's what they have currently. And they just spun off Vimeo recently. And Vimeo has since tanked. So the stock price. One thing about when you're buying for the Coffee Can portfolio is I'm a little bit less sensitive to the price I pay. I still want to be getting a deal, but I'm much more likely to pay a little bit of a premium for a really good business versus having to get a rock bottom deal. Just because the major thing you want to make sure you get right is the business. The price matters obviously a lot, but it matters a lot less than getting a good business. So here is what's going on with IAC. Currently the shares are $104.44, $104. The enterprise value is a little over $9 billion. The best way to value IAC is through a sum of the parts valuation. Anytime you do a sum of the parts, which basically means you are taking the value of each individual part, adding them up and seeing what they're all worth together, usually there's going to be a discount to that. So just because you add up the sum of the parts and it's worth more than $9 billion doesn't necessarily mean you're getting an amazing deal, because that value has to be unlocked, which IAC has a history of unlocking the value through spinoffs. So I think there's less of a risk of that. So you can see it's currently trading at 15.6 times earnings, but the earnings jump around a lot. So it doesn't really matter. All of this doesn't really matter very much. What really matters is the company is worth $9 billion right now. It's trading at $9 billion. And we can come up with an estimate of what we think it might be worth. There's two objective values that we can derive for IAC. One of them is their MGM stake. They own 59 million shares of MGM, and MGM shares are currently valued at $43. So if we do 59 times 43, we get 2.537 billion. So that is a pretty objective measure for MGM. And then Angie is also a publicly traded company, and IAC owns 84.6% of Angie, and Angie has tanked recently. So Angie, just a few months ago, you were getting a price of $16 or so, and it is currently $6.46, and they have about 425 million shares. So 425 times, what was it, 646? You get about 2.8 billion. We can say 2.75. But you can see if the shares of Angie go back to 16, then you're talking about this being worth $6 billion, this being worth almost $3 billion. So that's the market cap right there if Angie goes up back to what it was. But you shouldn't plan on that happening. So they're giving some guidance. So this is Dotdash Meredith. They're saying they're going to hit $450 million of 2023 EBITDA, which is earnings before interest, tax, depreciation, amortization. So I don't think they're going to do that. And maybe that business is valued at a 10 times EBITDA multiple. So you're looking at $3 billion there. And remember, they just paid $2.7 billion for Meredith. So it's worth more than $3 billion. Yeah, I think conservatively, I would say $4 billion. Very conservatively, 4 billion. The search business, it's tough to say. They did 788 million in revenue. I would be really conservative and I would say 500 million. That's conservative. The emerging businesses, I think they're going to hit on a couple of them. I'm pretty bullish on care.com. I think that'll be worth a good bit. But I think if you want to be conservative, like 2 times revenue for the emerging businesses seems pretty conservative because they're all pretty high growth. No, let's be even more conservative. Let's just say 1 times revenue. So 0.6. They also have 250 million invested in Turo. And it's tough to find what this should be valued at. So it's probably worth more than what they invested in. But I say if we just say it's worth 250 million, that would be conservative. So what you end up with in a really conservative valuation like that, you can say 2.55 plus 2.75 plus 4 plus 1.1 plus 0.25. So with that, you get 10.65. So your downside seems, in my opinion, to be really protected here. So I think the real downside scenario is right now is a lot of people are starting to lose faith in Angie, which makes me kind of interested in investing in Angie on its own. So you can see here we have a value of 10.65 billion. More of a bullish valuation would probably be more in the neighborhood of like 18 billion, like double its current market cap. And if we want to look at the IAC chart lately, it goes up and down a lot just because they do spinoffs and, a lot's happening with the company. So you're definitely getting a pretty good discount. Just a few months ago, 6 months ago or so, it was trading almost at 180. Now you're able to get it at 105. So if we are looking at the Coffee Can portfolio, which I have just started and put our first entry into, we are buying Interactive Corp. 105.11 is the price we got it at. We got 10 shares. So like I said, if you guys didn't watch the Coffee Can portfolio introduction video, every company that we put in the portfolio is going to be $1,000 worth, and then we can't touch it. We never sell. When we get the spinoffs, we don't sell those either. So it just continues to grow. So with IAC, the major downside as far as I see it and why I was initially a little hesitant is the executive compensation is really like just out of this world. So they have Barry Diller is the chairman, I believe, and then Joey Levin is the CEO. And I don't know, I thought about this a lot, and basically the number one criteria that I look for is a management that's really going to guide the company in a good direction and executes really well. So it's a little bit hypocritical to not like when they get paid tons of money because we're paying them, the shareholders. So yeah, obviously I don't like paying people crazy amounts of money, but it's probably worth it is sort of the conclusion I've come to when you're sure that you have the right guys in place, which I'm sure that they're the right guys. So basically, if all of the incentives are hit for the CEO, he'll make like about $900 million over the next 10 years. We would also make a lot of money in the process, so I guess it's okay. He's also really proven he's probably worth the money. He's created so much value over time that I've come to terms with the fact that, yeah, it is a lot of money, but I think it's fine. Another downside is the businesses they currently own could potentially be their weakest set of businesses thus far. And as we get more into the internet age, there's less like really untapped areas to turn from physical to digital, which is what they're really good at doing. So they've done like travel agencies, they've done dating, and now they're doing home services, which seems like a really hard problem to solve, but it's eventually going to get solved. And who better to do it than IAC, it seems. A big part of the recent price drop, in my opinion, is just kind of the turn in the market. Since IAC relies a lot on the public market to spin off companies, and Turo would potentially have an IPO at some point soon to realize a lot of their value in that. So when the public markets turn south, IAC takes a hit usually, which makes sense. It also presents potential buyers with really good buying opportunities, which I think we're taking advantage of here. I'm pretty happy with the price, 105, just based on the sum of the parts valuation. The best thing about them is they have an infinite time horizon. So they're looking out 10, 20, 30 years. Perfect fit for the Coffee Can portfolio. I think it sets the tone to get them in there first. start spawning off new businesses. They have a really long-term mindset, which is the whole point of the portfolio. So that's going to do it. IAC is officially in the Coffee Can portfolio. And if you guys don't know, I'm adding 5 businesses to begin with. So I'll make a series of videos on those 5 businesses that we're going to add to kick off the portfolio. And from there, we're going to be adding 1 business every 2 months. And we're going to start tracking the portfolio over the next years. So yeah, that's going to do it, guys. That's the video. Comment down below. Let me know what you think. Let me know if you have any questions. And thanks for watching.